Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Maybe a bit of frustration. We saw cattle in the South selling on Tuesday and at lower money. I think it was 2 lower in the South, 3 lower in the North. That really did set the tone for what we saw in the market trade this week. The struggle bus continued. We were dominated by the macros. We had a lot of outside market influence. Hopefully, no one checked their 401k this week. And how is this all affecting demand? And is there a lot of worries there as grilling season is underway? We're going to take a look at all of that today on the Cattle Call with Brad Kooima, as you can see joining me on the screen. He's with Kooima and Varlick out of Sioux Center, Iowa. So let's talk about, first of all, early cash on a Tuesday is usually not that good of a sign to set the tone for the week.
That's a very astute and accurate observation. And I think it speaks to a broader topic, maybe. And it was definitely lower, and particularly that 136 trade in the South really felt like it cut the legs out from underneath the market there that day. What it looks to me like, speaking a little more broader about what I'm seeing is I'm seeing a willingness to sell cattle similar to what it was, say, in August of 2014. Maybe for different reasons. Then it was because the market was super high. We couldn't believe our good fortune. We couldn't wait to sell everything we had. This time, I think it's because two things: cost of gain with corn this high, and secondly, the discount structure in the futures market. The futures market is clearly telling the feedlot that, you know what, it looks like it's going to get lower. Sell whatever you can. I'm glad that at least we have a packer that is willing to kill big. And of course, he's incentivized because the margins are huge, right? This week's kill looks like it was 680,000, Susan. 680. I don't even remember a 680 kill. So yeah, the packer's willing to kill him. We're willing to sell him. And so you've got a short-term situation where that's not, when people are that easy sellers, of course, you're not going to get a higher cash market on a deal like that, right? So the good news and the bad news is that we're probably struggling with the cash for a while here yet because of that. Just get rid of them, get them dead. I don't want to pay another feed bill. But a little more intermediate or longer term, that's not bearish at all. You're going to pull forward this, and it's a big calf crop we've got on feed. Remember the placements? We had about 3 out of 4 months there. They were record placements, right? We got to kill them all this summer. But if we continue to pull these cattle forward, that low is going to be better than one would think, and it's going to come earlier than one would think. But in the here and now, we're going to struggle a little bit.
So are the macros going to have as much influence next week as they did this week?
Oh, brother, that was a real problem, Susan. Real problem just become from a psychological standpoint, but from a reality standpoint, what happens is so look at open interest on the cattle. It's under 300,000. We've completely, I shouldn't say it. We've largely lost the long speculator. Long speculator is going like, oh, well, corn's having a big rally and crude oil and whatever. Let's throw some money at those markets. It looks like we could have a recession, though, and it looks like $5 gas. And what does that do for demand? And that's too much uncertainty. And the cattle always seem to bear the brunt of the uncertainty deal, right? When it's uncertain, cattle go lower. So I hope not, but I tell you what, we're trading these S&Ps into new lows, new contract lows. I'm glancing at it here while we're talking. It doesn't bode well. So yeah, I just am afraid in the short term, we've got to hunker down and buckle up because I think it's going to be a little tough sledding here for a little bit yet, Susan.
So how much of an influence or issue is that going to bring for moving this meat across the counter when consumers are so closely watching their 401k, their gas price, everything else?
It's a great question. I wish I had a great answer for you. I can tell you where we are right now. My expectation would be that this time of year, we shouldn't, and I don't think we really are, having a lot of trouble moving the meat. Now, last week, I did my very unprofessional, here's my graph, remember that? Showing you how big the spread was with retail over wholesale. That's a little annoying. But as I look at the big ads this week, there's a lot of places. There's a survey as you can subscribe to that has I believe it's 11 major cities and what they're featuring and stuff like that. There's places now that are starting to feature strips and ribeyes in the $7 and $8 range. They were 17 and 18 or even higher for a while. Hamburger meat looks to me like it's priced terrible high for what it takes to make it. But um, my answer to your question is I think the beef is okay after 2 or 3 weeks. It almost always is until just right after Father's Day. And then we go into a little different kind of a market, a more of a BLT kind of a hot dog, hamburger, sandwich. They're on vacation, that
Mhm.
sort of thing. So I think that I wouldn't want to leave the impression though that I think that there's a problem with demand. There isn't right now yet, not at all. Uh, but the Packer is going to have smaller margins, tough uh, as we move into the fourth quarter, particularly because as the numbers get tight, he's just going to have to give up some of his margin. And trust me, he's got a long way to go.
Finally, I wanted to ask you about the export numbers. Obviously, beef came in higher this last week. Then I think that maybe caught a few by surprise, and it was nice to see China back in the market when it came to
Amen.
making some protein purchases.
Amen to that. You're absolutely right. I wish we could shut down the other side of that import thing just a little bit and slow down the
Yeah.
amount of the imports that we have. But in terms of just raw exports, terrific. And yet, the last 3 months, I believe we've been a net importer. Having said that, so yes, the exports have been good. It's nice to see, particularly that the Pacific Rim, China and Korea and that Japan, that whole deal. We continue to see great exports. The weekly exports were fine again this week too. Which is real encouraging, particularly given where the American dollar is. We're not that we don't have a great trade with our counterparts there that we're doing business with. So, like I said, I think the demand is not the problem. We got to get to a few less cattle so we can try to gain a little bit of leverage back.
All right, sounds good. Thanks for joining us this week, Brad.
Sure.
And that's been this week's Cattle Call. As we always remind folks, commodity futures and options involve a substantial risk of loss, not suitable to all investors. That's been the Cattle Call for this week. I'm Susan Littlefield on the Rural Radio Network.